Hello YouTubers, welcome to X Factor Trading. My name is Sean and I've got a great video for you today. I'm going to show you how to analyze your chart and analyze a setup for an EMA crossover trade, or SMA, or whichever moving average you prefer. I'm going to show you how to guarantee that you never ever lose another one of these trades again, 100% of the time. Stay tuned. Alright guys, here we go. So in front of you here you have a chart. This is the euro dollar. It's on a 15-minute chart, but that's really irrelevant. You can trade whatever time frame you like. You can trade a 5-minute, a 1 hour, 4 hour, daily. Really doesn't matter. I do recommend staying away from the 1-minute chart. A lot of times on the 1-minute chart, your spreads will eat so much of your profit that it'll be difficult to be profitable trading 1-minute trades. So let's look at the chart in front of us. Here we have, again, euro dollar. And I have two EMAs on the chart. And these are EMAs, but again, like I said in the intro, doesn't matter whether you want to use simple, exponential, linear weighted, whatever your preference is. And then I have these arrows. So these arrows are just EMA crossover arrows. Just makes it a little easier for me to see exactly which candle caused the EMA crossover. So the arrow appears after the candle closes, in which that candle also caused your EMAs to cross. So on this particular chart, I have a 920. Again, when it comes to EMAs, lots of people ask, well, what's the best moving average? Guys, there is no best moving average. All moving averages work essentially the same. So my moving averages on this chart are a 9 and a 20. So you got a 9, the blue is the 9 EMA, and the 20 is the red EMA. So like 1,000 YouTube videos will teach you, when your faster EMA is on top of your slower EMA, you're in buy condition. When your slower EMA is on top of your faster EMA, you're in sell condition. So as you see this little run all the way here, my 9 is on top of my 20, and we have a nice little run. So it seems like these EMA crossovers are going to be great tools to help you catch some nice trends. And we can change these EMAs very easily, and you'll get the same results in different areas. You might get an extra trade on one EMA that you miss on this one, or you might get a smaller trade on the next one, next set, or a bigger trade on a different set of moving averages. Guys, quit asking which moving averages are the best, because the answer is there really isn't. Everybody has their own preference as to what moving average they really like. Now, that being said, so we can scroll back in history and we can find tons of times where these moving averages cross. And so I'm going to take a second here and explain to you how to guarantee that you never lose another one of these trades. I know there's 1,000 YouTube videos out here where guys are talking about trading the moving average crossover. It seems so powerful in hindsight that sometimes we get caught up with it, and it becomes difficult to make a good decision in trading and will cost you to lose a lot of money in this business. So, how do you 100% of the time never lose a moving average crossover trade? It's a very simple answer, guys. I want you to pay attention to me here. You don't ever take a moving average crossover trade. They look good. But if you ever decide that the crossover of the EMA or SMA or whatever is your strategy to take it, to take your trade short or long, when that crossover happens, you will lose money. You might win a trade. You might win 2 trades. You might win a bunch of trades. But you're going to lose more than you're going to win. and you're going to blow your account like 90% of Forex traders do. As you can see, I can put on this chart and we got a nice uptrend followed by a little bit of a downswing here. You could have made some money. Then a nice upswing, nice downswing. So in this section of the chart right here, the EMA crossover doesn't look too bad. And this is the kind of cherry picking examples that most YouTube video people will show you to make you to sell you their strategy, so to speak. But if you come right here, you get with the same set of EMAs, you get a totally different picture. Could you have won some of these? Yes, you could have. But I would say loss. And I would say loss. And I would say definitely a loss. Oops, I grabbed the wrong thing there. Definitely a loss. I would say there's you a win. There's you a loss. There's you a loss. There's you a loss. Now in this situation, because the market is fairly well downtrending, most of your downward crosses would have been, you'd at least had an opportunity to profit from them. Now, how you chose your take profit, or if you were just operating like a scalp and just going to watch it and close it when it was in profit, or there's a lot of different variations there, but a lot of those you could have made profit on. Now, if you had a standard, I'm going to go for 10 pips, or I'm going to go for 20 pips, or I'm going to go for whatever your number is, you're going to lose some of those. And then you got to talk about stop losses and how that affects what you're doing. So in this row, you may have, well broke even by the end of it, depending on, again, exactly how you did it. And it looks really good in hindsight to sit here and say, well, I would have took this one and I would have rolled it all the way down here. Anybody that ever shows you a trade in hindsight that says, guys, you should take this trade right here and you're going to get 30 pips out of it, and they're measuring the full run, is full of crap. It is next to impossible to always catch the full run in any swing in the market. It's not going to happen most of the time. You may get lucky once in a while, especially if you get adept to measuring structure and you put in a good support resistance line, a good trend line maybe, or accumulation zones. If you're into accumulation and distribution, whatever that is. But trading the moving averages blindly will lose you money. Let's find another spot on the chart. All right, guys, here's another section of the same chart. Just scroll back a little further, and let's look at this. Let's say you could make a couple pips on this cross up, but I would venture to say that all three of these are losses. I'll give you the benefit of the doubt. Well, no, I'm looking at it wrong. This is a loss because the crossover doesn't happen until the close of this candle with the wick on it, and you never really go into profit. This is going to be a loss because the crossover happens at the close of this candle, and you barely get into profit here, probably not even enough to cover your spread. This is going to be a loss. And then there's this guy right here. So you get one win, and then you get 1, 2, 3, 4, 5, 6, 7 losses to get one win. And even then, depending on how tight you had your stop loss and where you were riding it to, because see, that wick comes up and touches the previous little small swing high, and you do have a nice drop off. So it's easy to say, well, I could have caught a lot more pips there. then I lost on these 7, but that's a rarity compared to this. You know, even if you look at this one, I mean, you're at the close of this candle, you know, you get a possible 13 pips there. You know, and if you held in it long enough, you know, you might get 20 out of it if you stop the exact right spot at the top of that wick there. But what are you going to do if you're in it and a buy and the sell signal pops up and it crosses over the other way? Are you exiting? Are you trying to trade both ways? What's going on? So I'm telling you guys, do not trade the moving average crossover. Anybody on YouTube or the internet in general that tries to tell you to trade off of any given indicator, I don't care what the indicator is. I don't care if it's moving averages, stochastics. Look at the bottom of my screen here. I got a lot of stuff. I got an RSI. I got some stochastics set up. I got MACD. I got CCI. Oh, I got to change my line color. I got my CCI. I got on balance volume. I got TDI. I got XF5. This is a custom indicator that I made. And then at ADX. So I'm not against indicators, but anybody that'll tell you to trade specifically off of any indicator signal is telling you to lose money. They're lying to you. They're not experienced in the market. Maybe they're trying to sell you something and they're trying to get your money. Don't know what that is. But I'm telling you 100% of the time, you will lose money long term trading any indicator. Specifically trading moving average crossovers. I didn't go cherry pick this chart before I made this video. Euro dollar is the most popular currency there is. That's the chart I put it on. And again, we can see tons of times when you're going to lose money compared to when you're going to win money or win the trade. And that's just off of the obvious stuff. And again, when you start talking about stop losses and where you're going to put your take profit, you know, and what your money management strategy is. Some of these wins that could be possibly wins that I'm giving credit as small wins would probably be losses to some people. So please, 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 please quit trading a specific indicator. And for God's sake, please quit trading the moving average crossover. I'm tired of seeing these videos on YouTube. Please, please, please quit throwing your money away. Now, that being said, stay tuned. We'll have more videos coming out where I will show you a bunch of proven strategies that I trade and some of my partners trade, and we'll show you how you can make some money in Forex. All right, guys. Well, that's about it for today. As always, please give my video a like, or give me a subscribe, share my video. If you have any questions, comments, concerns, drop them in the comments. I'll be glad to address them as quickly as I can. And I hope you guys have a wonderful day and hope you have some profitable trading ahead. Have a great day.